You have seen this movie before. A huge technology promise, a fresh round, a clean headline. But what if the most important question is not whether quantum wins? It is whether the architecture earns the next round. Welcome to the Syndicate Room. I am Drew, that is Reese, and Val from AdValorem is our producer. Today we are placing ZuriQ as Pillar 3 in our three-pillar arc, Deep Tech Architecture and Allocation Discipline. We will answer the question we leave open right here. What does a serious allocator fund when the headline is years ahead of the hardware?
You know the pattern. A startup announces a large round, investors repeat the valuation, the technology gets translated into a market-size slide, and suddenly a lab milestone sounds like a commercial product. Slow down before the headline does your thinking.
That is the fear frame for tech investors. You can be right about the scientific direction and still be early on the financing. You can like the founders, the university, and the backers, and still misread a seed round as validation of commercial scale. Keep present tense evidence separate from future tense promise.
Here is the permission slip. You do not need to predict the winning quantum modality. You need a repeatable way to price the distance between today's demonstrator and tomorrow's proof point. That is less exciting than a moonshot and much more useful. Read ZuriQ's official announcement as a milestone map. It says the company built a 9-ion demonstrator in 18 months, fabricated chips with Infineon, and is now scaling research, hiring, and chip fabrication. The funding is permission to run the next experiment, not a certificate that the experiment already worked.
That distinction works in robotics, it works in quantum, it works in every capital-intensive technology where the lab, the factory, and the customer arrive on different clocks. The best early-stage allocation is often a bet on the next falsifiable milestone, not a vote on the final narrative. Track the round as a sequence. Pre-seed built the spin-out, seed built the demonstrator, and the next round should buy a larger controlled array and cleaner evidence of repeatability. If the milestones land, the architecture earns permission to compound. If they do not, the headline does not rescue the physics. This distinction works in robotics, and it also works in quantum.
4 steps. Open a note and write these down. Step 1. Define the proof point. You should be able to state it without saying scale as a verb. For ZuriQ, that means a larger, controlled 2D array, not just a larger hiring plan. Step 2. Separate architecture risk from execution risk. Can the design work in physics? Can the team fabricate it repeatedly? Can the control stack operate it? Those are 3 different questions, and they belong on 3 different lines. Step 3. Put a date beside each line. A 12 to 18-month window for a multi-qubit 2D chip is a monitoring horizon, not a promise. Mark what is demonstrated, what is planned, and what would change your mind. Step 4. Do the same for the business idea, what is measurable.
Step 3. Read the investor syndicate as a capability map. Quantination brings quantum specialization. Infineon brings a manufacturing path. ETH Zurich brings scientific lineage. Do not ask only who put money in. Ask what bottleneck each relationship can remove.
Step 4. Size your attention before you size your exposure. Give the company a watch list weight based on evidence, not excitement. Track hiring, fabrication, calibration, error rates, and customer or government validation. A watch list is a position in your process before it is a position anywhere else.
In semiconductors, the investor who waited for the full factory missed the architecture. The investor who ignored yield missed the economics. The parallel is not quantum is the next chip boom. The parallel is that geometry, process control, and repeatability decide whether a clever device becomes infrastructure.
This is also where our adjacent episodes connect. The warrant enforcement pillar taught us to separate a legal claim from a recovery event. The pre-IPO secondary pillar taught us to separate a quoted price from real price discovery. This episode asks you to separate a technical demonstrator from a financing milestone. Remember the framework position. Pillar 3 is not a prediction about a quantum winner. It is a method for allocating attention across uncertain technical paths. The question is not, will ZuriQ conquer quantum? It is, what evidence would make the next dollar of research rational?
The daily research desk is at gep.advalorem.io, and the education library turns these mechanics into reusable checklists. Start with the research, not the pitch. The 3-pillar overview is on Substack, link in the show notes, and it connects warrants, pre-IPO secondaries, and deep tech allocation into one long-form map. Bring a question, a milestone, or a disconfirming signal. If you want to compare notes with other operators and technical investors, the Discord is discord.gg/GERGTP9GTS. Community dinners are an interest list, not a sales room, and the community application is tidycal.com/advalorem/syndicate. Bring a question, a milestone, or a disconfirming signal. This week, while the ZuriQ announcement is still fresh, write your own milestone map. Save the official source, write the next proof point, and calendar the review date. That is how a headline becomes a research process.
The money is not the thesis. The architecture is not the outcome. The milestone is the bridge. We will be back with another research-led breakdown. Until then, keep the evidence in front of the story.